And Central Bank Governor Kamau Thugge has hinted that the CBK could intervene in the foreign exchange market to stabilize the Kenya shilling. Thugge, who spoke hours after the central bank increased the base lending rate by 50 basis points from 12.5 to 13%, noted that although the central bank policy is to allow the exchange rate to be determined by market forces, the exchange rate had overshot and did not reflect the current macroeconomic fundamentals, offering scope for the regulation to support the exchange rate. Let's get more from our very own Jimmy Mbogo.
In his first Monetary Policy Committee briefing of the year, CBK Governor sought to defend the MPC's decision to further tighten the monetary policy, saying the 50 basis points increment was one of the tools the bank opted for to ensure inflation remained well anchored, noting that it had remained stubbornly in the upper bound target range. The CBK, however, acknowledged the pressure that a high central bank rate mounts on borrowers, expressing concerns that high interest rates could undo the slowdown seen in non-performing loans in the last quarter of 2023.
We are concerned about the non-performing loans and what impact the rising interest rates would have on them. We continue to keep an eye on them, but we are also convinced that stabilizing inflation and stabilizing the exchange rate at this time is the most critical thing that we can do.
The governor has also expressed optimism that the government will be able to settle both domestic and foreign debt, highlighting the resource mobilization strategy by the National Treasury, while reiterating that government has never defaulted on its obligations.
We have the resources, the money that is coming in from the World Bank, from regional institutions, from the international multilateral institutions, our accessing capital markets, that this risk that of the Eurobond will be, in my view, will be completely eliminated.
With a significant number of transactions in the country happening on mobile platforms, and particularly M-Pesa, the governor has alluded that the central bank is keenly watching the frequent interruption of the service to ensure that it does not stall the economy.
And this is an area of concern, and it's an area that we are in very close talks with M-Pesa to see how they can be alleviated.
An increase in the central bank rate not only anchors inflation, it also attracts foreign investment and offers better returns for those who have invested in government paper. The question that lingers is whose interest is the central bank serving with the latest tightening? Jimmy Mbogo, Citizen TV, Nairobi.